रोलिंग बोल दिया
are not investors, they are players.
That is one.
Lot of thoughts. 94 लोगों को IAS officer बनना है.
So my follow-up question to that
So
would be
that is part कि Gaurav, what is happening? Server कोई नहीं चाहिए मुझे.
and we will also talk about
Perspectives from different angles. MBA, CFA, CSA नहीं बनते. India में unfortunately college title.
Welcome to the new episode of How It Really Works. Today we have with us Gaurav Shah from Arete Ventures. He's come all the way from the Silicon Valley, ventured into this area of entrepreneurship in early 2007. Lot of interesting talks, but before that, let me also tell you, he's one of those who asks really hard questions. He's one of those devil's advocate who's more of a devil but not an advocate. Over to you, Gaurav. How's been the journey?
Thank you, Gaurav. Interesting and intriguing both. Ups and downs, part and parcel. But as I always feel, failures teach you a lesson that success never can. And for us, from an investor or an entrepreneurial perspective, we have always learned or found gold in our failures, right? We stick more closer to our failures than success because it helps us prevent future mistakes. So, can't complain.
Let me take you back to that eventful day of 2007
Mhm.
when that conversation happened.
Mm.
You shared that you had no idea about terms like private equity,
Correct.
venture capitalism, etc.,
Uh-huh.
etc., and yet something triggered in your mind and you entered this world.
Mhm.
How was that day? What did you feel? And what triggered that decision that, okay, this is going to be for me?
That day still feels like yesterday. It's so fresh in my mind, and I can almost narrate it second by second, minute by minute. But long story short, that day was challenging because you have an opportunity in front of you that you really aren't even sure if you will succeed in it. So when this kind of an opportunity comes, you never want to say no. That's what temptations and excitement does to you. But the rational and the wise person within you says, wait a minute, it's good to be carried away, but will you be able to deliver it? So it was a mixed bag. That day was. But what shifted my decision making that I want to go into this private equity and not worry about the outcomes. I want to think of the process. And the process was like there is going to be pains. There will be an incredible learning curve with more pains, and it's just up to me what my purpose of career and journey is. And that told me that, as I always feel, ship in a harbor is safe, but that is not what ships are meant for, right? And I felt I have one choice, which is I can take the convenient road. I had a job, nothing to complain, life would have been good, but learning would have been limited. And then I have an opportunity where there are more pains here, and if I cross those pains, I'll learn something incredible. I think I still would say very honestly, hindsight is 2020, but that day I still did not have clear answer, but I had one understanding that I really am not going to lose anything out here. Um, the learning is going to just help me grow better as a person. That's my worst case. I did not think of worst case as money lost, opportunity lost, career transition, or immigration and whole lot of things. And I think I did not have clarity that day. Like I said, it's not an easy decision to take. You never thought, but I had that conviction that the worst case, which I still think with investments as well till today, and I learned from it, is not as bad as it looks like to be. I sailed through.
What were you doing before that?
I built one of the first biofuel refineries in Bay Area. This was 2006, and back then biofuels was called alternative fuels. Renewable energy was sort of a buzzword or a lexicon, new thing, and not the mainstream energy. Today, the world is talking of decarbonization, climate change, net zero, ESG, whole lot of things. And I've literally seen in these 20 years the whole renewable energy markets, government policies evolve. So I built one of the first biofuel refineries over there, and that was my first calling. And it was also one of the first refineries, biofuel, that was certified or accredited by a major energy company, petroleum refining company, and was one of the first ones in US to maintain petroleum petroleum integrity standards.
Hmm.
And I guess this is where, we had clients from in Bay Area, from universities to defense, Navy, and many others. And the mayor of San Jose visited us. And that's where, there were interviews, rounds, and things, which is where this private equity firm participated and said, probably this guy's doing something unique.
Tell us a bit more about 2007. How was the startup ecosystem in the US? Was it still emerging? Was it booming? How was it?
It was emerging. And so originally, in Silicon Valley, they say it's not an official record, but they say the first startup that began in Silicon Valley coincidentally started with Hotmail. Sabir Bhatia. That was the first time Draper Fisher Jurviston, DFJ, very early venture capital firm that didn't even know how to draft a term sheet because it was new. Nobody knew what this will entail, a new asset class. Let's just put it that way, because back then you had corporates and IPOs. That were the only thing.
Right.
So it started with that. But in some ways, it was static and limited to few.
Hmm.
From late 1980s to early 2005, if I have to say, what did that ecosystem look like?
Hmm.
It was vibrant. By then, Amazon and all others had evolved. Google was just into its inception. Yahoo, AOL were still the buzz, and very popular back then. And all, but I think those 2 decades of venture capital created a complete definition or an asset class, let me
Hmm.
put it that way,
Hmm.
where more investors, limited partners started saying we need to encourage startups and venture capital system. So in some ways, I would say 2005, 6, somewhere around that time, it was sort of an inflection point, because back then there were a handful of VC firms. I mean, there were a whole lot,
Hmm.
but still it was. But
Hmm.
post that, that whole startup ecosystem got more momentum
Hmm.
and focus, not just from investors, but then states started coming up with incubators, accelerators, giving startup the resources to sustain and survive, right? Until VC money comes in. So I've seen that initial part, where startup was still bit privileged in some ways. And then I started seeing what we call democratization. There were more VC firms. Then the VC asset classes started getting more categorized: angel, pre-seed, seed, series
Hmm.
A, B, C, and all of them came up with term sheets, liquidation preferences, valuations, exits, IPOs, so many things that were evolved, right? And post 2007, these things evolved like it became the go-to thing for
Hmm.
even best of the UC
Hmm.
schools.
You mentioned Sabir Bhatia, but I believe there were more Indians than Sabir Bhatia who were the change makers in that
Correct,
era. You were
correct.
also one of them. So, hailing from Mumbai, then working your entire corporate
Hmm.
life in the US, how were you looking at India as one of the top 5 startup nations? Did you imagine that this India would reach the stage that it is now?
Honestly, never did,
Mhm.
because we are a risk-averse country, and that has to do a lot with the family preferences, values we hold, and especially post-independence, when opportunities were not as vibrant and families did not have that financial liberties to afford, right? So for me to think that us being risk averse, sort of in our DNA, I never thought that the ecosystem would get so vibrant. I never realized that even startups from finest institutes of India that could otherwise take a corporate MNC job waiting for them would take this kinds of risk, right? So it was unknown, not imaginable, not imaginable. Um, to being top 5, and now I think we are almost into top 3, and next after US and China,
Yes.
is a great accomplishment. I find this intriguing because people are now aspiring. Okay, they now have a bigger reason beyond the revenue, monetization, income, however you want to call that. But I think government initiatives on Startup India, giving grants through so many incubators, accelerators, government sponsored, did the thing. But I also think that the societal change, that, in Silicon Valley, we always say that learn to embrace failures more than successes and don't be afraid. In other words, they encourage failures. And here, if you say you failed, you're looked down upon because
True.
society of toppers, elites,
Yeah.
and all.
Yeah.
And that mindset has now changed. People are not afraid of failures. They are not afraid of
Yeah, I
venturing
think
and
that's the
trying.
biggest shift.
Biggest shift. Like I said, government initiatives are fantastic. They sowed the seed, so to speak, but the tree was nurtured by the societal acceptance that it's not as bad to fail. You
True.
will learn something. If nothing, when you go into corporate, you will appreciate the founder of that company,
Mm.
that how did he build. And these journeys happen even in 80s, 90s in US. There were so many
Mm.
failures. So many VC firms came and went away, but it did not stop them, right? And I
Mm.
think it's imperative for us also not to stop here.
Almost 20 years in this journey now. And just kind of interested to know what has really kept you going and still does.
Host of things, I would
Any
say.
particular anecdotes, any kind of incidents or examples for our viewers that you can share that, okay, that was one particular incident which pushed me to continue going in this direction despite of the risk factors that this market has.
So I would say a huge part of it is, the inspiration from how Silicon Valley thinks and works, not with how they make money. And
Would you like to share any incident?
lot of it. I myself, when I was going through raising funds, because before I came into private equity, I was managing refineries, biofuel refineries, and businesses. And I was at an inflection point where the risk was too big than the reward. The ratio was skewed, and I had to take a decision. And I wasn't sure that if this kind of a commitment is the right thing to do or not. And right then, at that point, my attorney, patent attorney, whom I hired for filing inventions in US and PCT both, shared with me the story of a founder who was building an incredible product where he knew that the risk is way too high to afford. In spite of that, he took that risk, and today that product is global. World over, we
Would you like
admire
to
that
name that
product.
product?
I wish I could, but I think it's a product that most of us know
Uh,
and all. And it was a transition. It was an inflection point.
uh,
So to me, it was like if someone can think of the risk and still accept it, not thinking of rewards or outcomes, I probably need to have a purpose to what
mhm,
I want to do,
mhm,
whether it's my own inventions, entrepreneurial journey, or investments, private equity, venture capital. I would say it still holds that impact in my mind.
mm,
I still reflect upon it in a nice way, and it keeps me going. That, why do you want to succeed? That was the question that was lingering over there. Is this success meant for fame, glory, money, and my own calling, my own soul searching, so to speak, led me to that these are transient products. In products, I mean, uh, they are here today, they may not be with you tomorrow. Okay, so I felt that the reason these guys continued in, like, look at Elon Musk, just as an example. you know he started his journey from PayPal to building an impossible company called Tesla, which has gone through incredible challenges. People may not know Tesla before 2010 much, but I think it had. And Elon was not someone to give up. Again, it was an inspiration because right at that time I was over there, and initially Tesla was a coupe. It wasn't a sedan. And then they shifted gears because Tesla's inspiration came from Lotus, the James Bond cars. And then they shifted gears and they built it up. So when I look at that, and then Elon Musk went from Tesla to SpaceX, Hyperloop, and now Neuralink, richest person in the world. But is money motivating him? I think he sleeps on a couch on the floor. He had put it up on social media. He's not attached to those luxuries, works 365 days. It's not money that motivates. It's, as I learned in Silicon Valley, that addressing
mm,
real world problems is probably the most incredibly satiating thing
mm,
that you as an entrepreneur can have. And these people, whether it is Mark Zuckerberg or Steve Jobs, think of it. They created product that actually are category creators and a part of society that benefits. through iPhone and an iPhone operating system, WhatsApp was launched. Now today we have the whole world that is app based. Through Facebook, world started getting connected more. These people did not have the only reason of making money. It was a byproduct, I would say. Their purpose was, what can I solve that I can become a part? Perhaps somewhere leaving an indelible mark in society even after you are gone, right? To me, this experiences shaped my thoughts and foundations at what I want to do. And it was always very clear, and it still is, that I focus on frontier
Hmm.
technologies. I focus on future tech. I don't participate a whole lot into something that is existing or
Hmm.
part of it. Why do I find that? Because my patents, inventions, once upon a time, they still are, but we're focused on converting waste into energy. I thought waste is a crisis. Today, 12, 15, 18
That's
years
become a
later,
market.
it has become a market, and worldwide we are now saying waste and pollution is a challenge now.
Hmm.
It is not a sideshow anymore. This and these experiences that I have seen have made me feel that if I have to keep my focus, it has to be on future. And uh, and by future, it's these frontier technologies, right? Quantum computing is on the horizon. Blockchain AI have always evolved. AGI is coming up. In biotech and life sciences, I think stem cell, drug deliveries, precision medicines, all of these are most likely going to be the future. I hope it would be nice if they are, because they solve problems that in today's world there is an acute need of it. And it still stays my purpose from what I had learned, that you don't want to be, I will say for myself, you don't want to be doing run of the mill stuff, and you want to be. But between these thoughts, see, having thoughts is one thing, but as I say to startup founders, hope does not fund investments, and ambitions are not a part of strategy. When founders pitch and say that in 5 years we will turn into unicorn, this, that, sounds very good. How are you going to achieve it? Right? It just cannot be that it's a hope. Okay. And I had one bottleneck. As much as I was aspiring, I thought, what could take me there? That was an incredible part where I learned that learning is more important in my case than working. The more amount of time you spend learning, understanding technologies, markets, innovations, all these things, the operational readiness matters a lot more. And when you work in frontier technologies, those technologies don't scale as quick as soon as you would like it to be, even though they might be optimistic. And I've seen this across renewable energy, biotech, these deep tech, which we now term it as, that they have taken 5, 10, 15, 20 years. At every point, it was like it's going to be successful in 2 years, 3 years, 4 years, and it never was. And those are the pains that you have to address. That why do these incredible technologies delay in what we call it as technology readiness levels, right? What happens to those TRLs? Where are those TRL failures? Lot of the investments in frontier tech, you're betting on the future, which majority, most, if not all, cannot predict. So we know the unknown and the risk. Now comes the another unknown, which becomes itself what you're betting on, the innovation, the invention. That itself carries a risk. And that is where I think lot of learning, reading, understanding is probably critical if you want to be in that space, because the risk is exponential. I always feel venture capital is a very risky asset class if you don't understand the investments, whether you are a GP or an LP or you are a startup. Okay, the whole ecosystem I'm talking of. If you don't understand the risk, I mean, I think it's a double-edged sword.
That's right.
That needs to be understood, and I believe that learning part is very important. Very important.
True. Over the course of last 20 years, and you also talk about leaving a legacy rather than earning, making money, and money always is a byproduct. How many of such founders have you really met during the course of so many pitches you've attended? And I personally experienced one pitch where you were probably the only guy who was asking the hardest of the questions, and I could see the intent was not to grill them but to kind of help them out.
Correct.
Were you still looking for that intent to create a legacy or make that, like you said in quotes, indelible mark? Were you really looking forward to that, or is
I
there something else that drives your decisions?
I was and I still am. Like I said, that the core with venture capital when it evolved in Silicon Valley was to address a real world problem. Today it has become, startups have become commodity, right? That you have one player, you're copying and you're creating a market
Mm.
competitor. Back then, the venture capital world was based on what problem you're solving that can be a part of a consumer's journey. Okay, this particular thought still stays with me, addressing a real world problem. And this part is very hard. It's not hard to decipher, but unfortunately, it is lost in translation or transition or the evolution journey of how startups are. And I find I when I look into the startups, I still question myself. See, I look at a startup from a perspective of what part of the future will you own
Mm.
and why would consumers accept? I'm not thinking through the risk of your technology, whether it will scale or not, right? I'm not looking through what consumers are doing today. Are you intending to be a category creator? Are you trying to disrupt things? And if you are, then that is where real, what I call enterprise values or value creation lies. When I was looking at those startups, I do look for them, but not always. See, now, unicorns are rare. That's how the unicorn is termed, right? Unicorns are very rare. And I am someone that believes of investing in identity, meaning people first and idea afterwards. My thesis never has been pitch deck as much as it has.
We've got resources,
Mm,
even
yes.
more than how they were back in our days. There are more resources, more avenues, access to funding,
Hmm.
access to mentorship, access to market. It's quite faster
Hmm.
comparatively, and validation, feedback, whether positive or negative, comes quite early to a startup.
Hmm.
Despite that, and you also, one very interesting point you mentioned during our conversation was that you always define startups different from entrepreneurship. So
Hmm.
we'll take one input from you on that part as well. But also, despite of all of this, the
Hmm.
kind of vibrant ecosystem, like you rightly mentioned in India now.
I think I cannot club everyone into it, but if I have to take a holistic view, the large primary reason for failure is not challenging their own self enough. Lot of these startups are dependent on what others are doing,
Hmm.
and that may not be wrong. Sometimes you have to keep a eye on your competitors, you have to keep an eye on the market's transformation, the velocity of irrelevance, which I spoke to you earlier, right? Technologies are evolving so fast that even Mark Zuckerberg and others are saying that we are unable to catch up with the disruption in AI. At what point do we keep chasing it? Right, I think not questioning your own self is where number one is, and being afraid of the outcomes, I find this to be a bigger problem. One of the reasons why I see startups have failed is because most of them are trying to do what others have done and they are hoping for success. When you get into these kinds of vibrant ecosystem, you cannot really have that kind of a comparison or a parallel where you think if he succeeded I will.
But being unique is also risky in these days, isn't it?
But how do you position uniqueness is what matters.
Hmm.
See, there is nothing wrong in looking at competition if they are doing extremely well and there is a need in the market. Okay, there might be, sometimes they say that being number two in the industry is more profitable than being number one. The cost is quite high. So there is no harm in relying on others to draw some parallels and create your own value proposition. The problem lies when you are comparing or you are constantly thinking of competition and not of the markets. I think this operational execution and majority of the startups, if you see from even Silicon Valley, they don't fail because of lack of ideas. Rather, on the contrary, it is the ideas that funds them. People find it incredibly when I see some of these pitch decks with some ideas that they come up. I find it incredibly exciting. Why am I excited? Ideas, right? Where they fail is probably the operational readiness or the execution. The implementation part they are not challenging themselves enough. They are thinking because it worked in the past, it is going to work this time. A classic example of this, and I think I see red flags, but maybe too early to tell, we will see, is the D2C space that's evolving. Most are thinking that to create a habit with customers in India, because FMCG is something where once a customer earns your loyalty, he's forever going to take.
True.
Look at it. If I go to a store to buy butter, I say, ek Amul dena.
Amul,
If I
Tata.
go, or whether it is with soap, shampoos, butters, bread, there is a particular brand. When I use the word I want to search, I say the word Google. Let's Google it,
Hmm.
right? The this part rather
Correct.
is very, very interesting, as well as not well understood. They are thinking that the category, the getting consumers habituated to our product and the way it works is important, and that is where the costs are involved. And once you get that, you have a lifetime value almost, because the customer is loyal to the products. But I don't think that this is going to work out very well, because you have not defined a problem of a customer that would cause a replacement. I always feel with startups, the early adopters of your product are not going to be your final customers. At the end of the day, as the company grows, you need to have a product that can go in the masses as well as classes. And you can be in a niche category if you like, but then you have to justify again towards them repeatability behavior. Why are they buying your product again? Is if it is only because of ads, discount, or visibility, and that probably is a wrong
Yeah.
strategy. But if they are buying your product again because there is a strong value proposition that their previous loyalty to whatever brand or product was, then you probably don't need ads. Then you don't need. And I think that with D2C brands, many of them are thinking that because big consumer FMCG brands did still do lots of advertising marketing to create visibility and awareness, that you want to be in the front of the customer, else a competitor will take over, uh, is probably true, but probably not rightly implemented. And the valuations I see is, I don't know. It probably seems like a bubble territory. I've always felt that the bubbles are not created just by valuations excess, but they are rather created by credit excess. So many VCs are very keen in succeeding in D2C space. So much of capital is going that if someone is using 100 crores fundraise as an example and deploying 60-80% in marketing, they are giving it a green signal that okay, yeah, it will take time to turn into a brand, and somewhere it does. But I think it's a mismatch that hasn't been still understood. And these are the kinds of things that you cannot compare the past always and think it will repeat in the future. You have to take a pause and think, have consumer preferences evolved? Like in our country, just about 5, 10, 15 years back, we would not buy a product until we don't touch it, see it, right? We want that store experience. And today, e-commerce is vibrant,
Hmm.
right?
True.
Why? Because consumer preferences have changed. They are more trustworthy that if a product doesn't work, I probably can ask for a refund, exchange the product, and replace it. So, changing consumer preferences are have to be incorporated in your business strategies. It doesn't matter whether you are in B2C or B2B. And this particular part, I still want to emphasize that the operational execution or the implementation, or how we call it as go to market, I think cannot be a template. Most of them are thinking this is the template, and I feel you have to change, because see, startups are all about, to a great extent, doing things that have not been done before. And if that is the mindset you carry, then your operations, your consumers, I mean, just think about it. Would you ever let someone stay in your home overnight? Today, Airbnb does.
Yeah.
Would you have ever thought, anyone would have thought that? Now, could Airbnb go and think, what are the business models that hotels have? They created their own category and they were
Yes.
not afraid to try it out, and it did work. Would you have ever thought that you would want to be in a taxi business? Uber today is giving you an opportunity.
Hmm.
Does it have a business model similar to what taxi businesses are? No. So when you are a category creator, or when you are sort of trying to disrupt, you cannot always think, to some extent, you can draw parallels, but not always think that this is the template that is going to work. I don't have to stretch. No, you have to stretch your imaginations, you have to challenge. Mistakes will happen, there will be learnings. Don't be afraid of that, but come out of it stronger and see what fits best.
You keep differentiating startup from entrepreneurship. Why?
Risk appetite, risk preference. Most of the times, when you speak of entrepreneurship, you are thinking of a business that's going to be there and you have spent considerable time and efforts. And I'm talking of this as a conventional entrepreneurship model. Back when venture capital or investment did not evolve as an asset class, most people would build a business on their own capital, borrowed money, whatever that may be, the shareholders. But most of them made efforts. At that time, entrepreneurship was not something that everyone preferred. Okay. And that entrepreneurship was more based on the local market dynamics that I see in a particular region. There are not enough, as an example, hotels or restaurants or a particular type of cuisine. And I want to be local over there. I'm not impacted. You do that, even if it takes 3 years, 4 years, 5 years, 7 years, you are on your own capital, your own learnings, good, bad, and ugly, and you continue. And at some point, you become a brand, and hopefully, you succeed, which used to be the case because not many were participants. And this is where I feel that it is an entrepreneurship that you have been in that world, and you're putting your capital. With startups, there are way too many. Um, I shouldn't call divergences or digressions, but way too many factors. Let's put it that way. And the factors are that the moment you build something, it goes to a particular point. There's no reason why other startups will not come into the play. You look into fintech, you look into edtech. Someone began, many others observed, and a lot many more participated, thinking what more can I create. So you are always competing and you are on your toes compared to the conventional entrepreneurship where you are in your own sort of a multiverse, universe, metaverse, right? That the risk is with you, but so is the reward. You decide. And you don't have that peer pressure that someone else is going to come up. It was far and few between. The other aspect that happens with startups is, so this is one, that competition is going to come in. The second part is you are always in the journey of creating value. By value, every 18 months, you are looking to raise funds for new round of investors. And with that, you have to accomplish certain milestones. Those milestones have to be credible. So, and then at every fundraise stage, you also are transitioning from who you are as a startup. You could be going from pre revenue to early revenue. You could be going from early revenue to growth to pre IPO stage. This startup ecosystem is constant and never ending learnings, whether it is from customer perspective, revenues, growth, how your company transitions from 20 employees to 200 employees, investors, and competition. Lot of this is not present in the entrepreneurship world. Don't get me wrong, entrepreneurship is not without its own challenges. I'm merely saying that the startups have an ecosystem that has constraint at every stage until and unless they most likely get to an IPO stage where hopefully, if all goes well, today IPOs are also questionable. They sound like an exit for most investors, and many IPOs we have seen here in India have become sort of, I hate to say this, but I will, a dumping ground for retailers, right? Where retailers are participating, the stock goes down and they realize, so they have to be very smart. Start reading DRHP's draft red herring prospectus and educate yourself if you want to be smart, because what seems like the best brand out there may not be the most
We've
profitable
seen that.
company.
We've seen that. We've all seen that.
We all have seen that, right? That automatically we all have learned and
Yeah.
all, and we have seen. So this is why I feel that startups differ from entrepreneurship. You are always challenged, you are always on your toes, you have factors coming in from
And
multiple
eventually,
angles.
the word entrepreneurship has made its way into the job descriptions for the professionals, employees as well. Your take on that? We see job description talking about you should have entrepreneurial zeal. this advice of yours may help our audience who's looking for a job somewhere in the corporates.
So I say this, like how some countries have a rule that after you graduate, you have to serve 2, 3, 4 years in military, right? And I think sometimes that kind of a discipline is very good. Okay, it brings lots of things, not just patriotism, but many other virtues, qualities that you learn with that discipline. As an employee, it's see, if it happens that you were an entrepreneur and you're an employee, as I said just a while back, that you will appreciate the founder more because he was able to do that's something you
The
couldn't.
challenges, the
And
uncertainties.
correct, and he dealt with it and he rose to the top, and rightfully so. It helps you appreciate that how companies are formed, what are the challenges, and all, and then you become more reasonable, right, with companies growth and performance and promotion and whatnot, because you realize that it's not easy to
Why
change.
is it important for a job seeker to understand the dynamics of how a company is built?
Very interesting question, Gaurav. Part of it lies with how our ecosystem of academics is. That in the past, and I don't blame anyone, but in the past we were accustomed to being in school, working hard, getting good grades, right? And then when we went into businesses, companies, we did what was taught, meaning in terms of degrees you hold, right? Of course, what was taught was maybe little theoretical. So in corporate world, you start seeing practically how things are, and that particular aspect in today's time is now creating a void in the corporates. Corporates are much challenged like the startups are. And the way they are challenged is they are now seeking for growth beyond it, beyond what they were doing. To give you an example, Google is no longer a search company, Reliance is no longer an energy company, right? And I can give you countless examples across the globe where these guys are. How do these companies who are not as risk takers as startups can be, or strategic private equity transactions can be, right, is because of the employees they have, right?
Mm,
They are their assets. And one of the things that happens is those cross functional skills are absent. And as companies, if Reliance has gone from energy to consumers to tech and so many others, right, now they are going into AI and others as well. This is where they are thinking that our employees have to be our assets, and to be an asset, that you cannot just rely on the past. This whole ecosystem is realizing that, I will say this for myself, that I am a chemical engineer and I love who I am by qualifications, but I can no longer be a chemical engineer. If you come from a computer background, you no longer can be that. Why is that? Things are changing so
so
fast that
fast, yeah.
if you don't catch up, you will feel left out. You will be obsolete. Okay. And companies are saying that now degrees is not a one time thing. You get it, you live with it for a few decades and you retire. You will have to constantly upskill
Upgrade,
yourself.
yeah.
You will have to learn whether it is tech, or because tech is integrating everywhere, whether you are in biotech, pharma, AI is now getting into applications world, right? So it's going in all different directions, from construction, real estate. If you are from construction background, you have no choice but to imbibe, and you wouldn't imbibe it overnight, but if you have learned a bit of those courses, gained some skills, you will be little receptive to listen to that and probably become a champion in your company. That, look,
True.
I think I can help implement this in our company. These are the advantages. We can become a prop tech in house without doing anything. These things corporates are realizing, and they are questioning, what did you learn in the last 1 year?
True.
What new things did you learn besides your own experience, right?
Hmm.
So I think that corporates are also realizing that we are in a multi-dimensional world rather than a unidimensional world that we were in, and it was okay. Everyone has to evolve.
That's
When we
right.
talk about digitization and transformation, there is hardly any sector that will not have to change or hasn't changed.
Mhm.
Those employees have to upskill.
We've now reached to the conclusion of the podcast. So I've got two parters for you. First, I mean, of course, justifying the theme of the podcast, how it really works. What does it take to impress Gaurav Shah in a pitching session?
Oh, I almost want to say nothing. Be who you are. I
Be
think
truthful, at least.
Let me try. Let me try. Be who you are. I'm more curious to learn who you are rather than who you are trying to be, meaning your pitch deck. Of course, your pitch deck is relevant, which is why I'm speaking, right? But as I said, invest in people first, idea afterwards. That remains my sort of now open secret, that I would want to see the identity, because I think leaders can make or break the company. Startups have small teams, and it's a leader that can make a change. And if you're not on top of your things, you could miss out on the best opportunities. And if you're not on top of things, unfortunately things may go south, right? Knowing the fact that less than 2% of startups succeed and the failure rate is nearly 98%, that at least in Silicon Valley, where 98% of startups disappear after 2.5 years, 2% succeed, and less than half of them actually reach up to Series A. So the odds are really against you. And I constantly question, I'm a student of learning, and I constantly question what causes these startups to fail massively. Ideas are good, founders are good, they have a potential, a value proposition. Where is it that majority are failing? And these failures are not defined or bound by anything. Okay, they will evolve as markets, consumer preferences, economies, societies evolve. These things will evolve, but at least there is some guidance. And I personally think, Gaurav, that founders have done everything for the company but themselves. You know, their businesses, startups, everything is evolving, but somewhere they have not been evolving as good as much as the company needed them. So my preference number one is that. The number two, I think most startups fail to address risks. They fail to realize that the odds are stacked against me, and I would want someone, or I would prefer, see, for us, when we look through pitch decks, the risks are evident to us, whether the risk is in the idea, the technology, or the people. Those are the only three things that are there in startups, in angel, early stage, and seed stage, right? We know them, but we want to see how introspective or how honest the founder is in acknowledging the risks. Does he have the ability to detach himself from the startup and see where things can go wrong? It's not important for them to confess as much as it is important for me to see if something goes wrong in the company. Is the founder clear enough to realize that this is wrong and I can stop this wrong at this
True.
time, rather than escalate into something that becomes challenging and then it becomes irreversible damage,
Hmm.
right? You could not protect it and the company went south. So, one, be who you are, and second is the risks, and third, you know, instead of being in one dimension, 1D, be in three-dimensional mindset. Learn
Interesting.
to acknowledge that whatever you have built today is, or thinking today, is not necessarily going to be a part of your future. Be agile, be flexible, that if markets and dynamics change, I'm willing to adapt myself. These three things that I look, and obviously then there are lots of things with innovation,
Hmm.
markets, customers,
Hmm.
potential, your teams, founders, because when you are in seed, early stage, at least not series A and beyond, it's largely your vision and strategy. So this is where I say, the founder, his thinking matters. I don't mind, and I'm less inclined, or I prefer less to what the titles, degrees they come from. But if you have an inclination, you have a mindset, and you understand that this journey isn't going to be easy, I usually don't look into those preferences. My thesis book doesn't allow me to do that, because I feel leaders are unique and they will come from places and circumstances that would have been least expected.
Hmm.
So I leave those doors
So you
open.
invest your time and money in the entrepreneur, not the startup. That's what you
A
feel.
lot of it, to a great extent. I mean, obviously, like I said, I'm not discounting what the startup is and where they
Hmm.
are going, but the entrepreneurial mindset, and for angel seed stage, that is very important,
Hmm.
no matter what.
Last part of the question. You yourself has filed around, I think, 12
Yes,
patents,
six
six in
in US,
US
six
and
in
six
PCT.
in the Europe.
Yes.
What does it take? I mean, from a patent to the product, the mind to the market, why the journey is so difficult these days? Why so many patents are not seeing the light of the day? Why are they not being commercialized?
Great question. And I so wish I could tell you of an event that's happening right now, a project I'm involved in, but too early to disclose. But a great question, Gaurav, something that I've always been thinking and myself, making those patents and commercializing them and learning what I have. The reason I find is the innovators that are filing those patents and building it,
Are they overbuilding?
they sometimes are,
Hmm.
but it's not the problem of overbuilding as much as it is a problem of thoughts and ultimate objective. If your objective is just invention, then probably that's not going to turn you into an entrepreneur. But it is, if your objective is that I have this patent, I think it solves a real world problem and I want to execute it. And the switching of hats from being a research to being an entrepreneur and learning what it takes, right? The last event we attended for that state, we saw that there were some phenomenal ideas, but most investors were turned off. But I could see through them from my research angle and inventions, and I was like, this is outstanding. I don't know why others are not finding value, but I know where this can go.
Mm.
The only reason was because I could see through those patents behind the
So
scenes,
you're
right?
also saying that many of these research projects are not being as successful because the eye of investors is not that mature enough to. Is that what you're saying?
To some extent, yes, because they expect when you are coming for pitching and hopefully for raising funds at whatever levels, they expect that you have some learnings. You have some do's and don'ts of pitching or understanding how a company grows. They do expect. See, venture capital is the most riskiest asset class. Somewhere investors have to be reasonable about the kind of risk they can accept, right? If they see that the entrepreneurs are not able to narrate the story to us, they somewhere get the red flag. So
Mm.
this sometimes acts as a turnoff, and this is why I was saying that if you have filed a patent and you know its potential is high, then you should focus and switch gears. I think one of those startups, I was telling them,
Yeah.
let's switch gears and now think of this patent as an entrepreneur.
Mm.
How do I commercialize it?
How do I
What do I
commercialize?
need? And how will I go and how do I present? If you are
Mm.
not able to switch that gears,
Mm.
then usually what happens is, those patents get into licensing, right?
Mm.
And that does not fetch you a whole lot. I think it does not become an investable asset. You
Mm.
could do that personally on your own with those patents, but someone else is building on your own merits, right? And then you have to live content with it. But the biggest reason is not being able to switch that mind. And this is why I was saying that we are now living in an era that where one degree can most likely not take us for 4 decades. We don't know what future brings, but as things stand today in 2026, I don't think. And this is where research scientists, patent holders that have been awarded, they have to realize the value of upskilling, and they have to take this lead in transitioning the mindset, learn things new, and then build
Mm.
that into a startup. Otherwise, a lot of them will bite the dust, unfortunately.
Thank you very much, Gaurav. Lot of questions in my mind, but I think the time will not permit us to
I know.
extend this conversation. We'll have it off track. Thank you very much for your time, Gaurav. It's been a pleasure having you here with us, and I hope our audience will learn a lot from this conversation.
Absolutely, Gaurav. Thank you for the excellent questions. Thank you so much.